Okay, so the theme for tonight's discussion is security tokens in 2019 and beyond, right? So what I really want to touch upon tonight is what is the state of the industry, where do we go from here, and I don't want the high-level fluff, I want the nitty-gritty. And I already warned you guys about this. So before we start, maybe can you guys quickly just go down the road and give me 20 seconds about who you are, what you do?
All right, I'm Alon Goren. I know a lot of you guys here. It's a really great room. Thanks for having me. Security Token Academy, they always put on amazing events and great content, so proud to be here. I've been in the space since before it was called security tokens, but what I do is I have a couple of events in town, CIS, Security Token Summit, but what we really do is we're entrepreneurs ourselves. We're launching companies in the space and helping, very similar to your vision, to elevate the whole industry.
Fantastic. Mark?
Sure. I'm a partner at FisherBroyles. I'm in the blockchain practice. I've been practicing in the space for about 2 years, and pretty much all my clients are companies that are somehow implementing blockchain technology or doing an STO.
My name is Henry Elder. I have been doing real estate my whole career, and previous to that was doing real estate for 4 generations before that, so it is truly in my blood, and I never had a choice to do anything else. But in that vein, I sort of was baptized into the blockchain in late 2016, and by early 2018 was tokenizing one of the first commercial properties in the US, which was a deal in Chelsea, Manhattan, and have taken that knowledge and applied it across the security token space.
Fantastic. Okay, so I keep, every year people are like, oh, this is the year of something, right? So apparently 2019 is supposed to be the year of security tokens. Do you agree or disagree?
Man, I think that 2019 is going to be the year that people realize it's going to be a few years. A year of anything. You got to be realistic about it, right? Security tokens are regulated. This is not something where you're going to have the retail market coming in with the whole pump and dump crazy hype stuff. You need people who are building real solutions, who are building real products, and then you need institutional investors and traders and users to use those products. And those people don't come flooding in. They dip a toe in, and then they put their foot in, and then they step into the shallow end before they really get into it. And so it's going to take a few years for them to get comfortable with these tools and get comfortable with the fact that these things actually work.
Do you guys agree?
Yeah, I generally agree with that assessment. I think 2019 is going to be kind of the beginning of security tokens, and it literally has been kind of the beginning of the actual distribution of security tokens. Really what we've seen is everyone talks about the infrastructure being built and ready now. We have the absolute basic necessities right now in terms of issuance platforms and exchanges or ATSs being live, but we still have key pieces that aren't going to work. Aubrey talked about there being liquidity. Well, key pieces of things that we need for liquidity are things like information. When was the last time people talked about how we're going to get private company information so that private companies can actually be successfully traded and there can actually be liquidity in private companies? So there's all these kind of issues that we need to figure out, and that's why I think Henry kind of hit a nail on the head, is that we have a little bit of time to go until we really build it up. But this is definitely the beginning of something exciting.
1000% agree. It'll be looked at historically as maybe the birth of security tokens, but it's not going to feel like we're all gonna get into these awesome deals and all these things are going to happen. It's just not going to. Even the guys who are fully invested in it being crazy. I think on one of your videos, Carlos from Securitize said that there's going to be 100 security tokens created in this year. 100 isn't a whole industry. Isn't that crazy? If as an attorney he had to say, I get this piece of a slice of an industry as service providers, as whatever, if you took 100 and you took what portion of that goes to the service provider community that actually has to support this thing, there can't be a flourishing community with that kind of capital. So there's going to have to be so much more, and historically, we're all going to look like geniuses, hopefully, knock on wood, because we're here now and we're doing something. It doesn't necessarily mean that we're all going to be billionaires, but we are pioneers.
But I hope so. I hope so. You mentioned that Carlos said that maybe 2019 we'll see maybe 100 security tokens. What do you guys think about that? What kind of traction do you think we're actually going to see, given that the consensus is it's still going to be a couple more years?
Well, what I'll say just to the 100, I'm saying 100 probably of a certain quality, because I mean, if we look around this room, there might be 30 of them, but how many other? Let's be honest. A lot of us are entrepreneurs and startups. How many entrepreneurs and startups that have an idea successfully raise their first round of funding? There's a significant drop off just right there, and this is a hurdle that takes a lot of time and money and hiring the right attorneys and the right advisors and we're talking about compliance now. You can't just say you're doing something that's compliant and it's compliant because you said it was. You actually have to do filings and do things right and make sure that, everything is verified and done correctly. So, there are going to be more than 100, but when we talk about real ones actually trading, maybe 100.
Yeah, no, I think it makes sense. Like 100 that are going to be compliant with U.S. securities laws, which doesn't mean that all the other ones aren't going to be compliant. I mean, we have to remember, just the one thing that STOs are like ICOs is that it's completely global. And there will be issuances outside of the US by non-US companies. And those are going to be just as legitimate as the US ones, potentially. There's also going to be a lot of them that don't recognize that US laws are more complex than laws in other jurisdictions at times, or more strict, and they're not going to comply with them. And if we add those in there, the ones that take it easy, or the infrastructure providers that say, hey, this is how you tokenize it by coming and creating this asset on our decentralized STO platform, we're going to have hundreds and hundreds and hundreds of them. But we're probably going to be close to 100 that are actually regulated.
So. And I think it's also a spectrum, right? So you and I were having a conversation before this, and you told me that some of your clients aren't necessarily going out and doing an STO this year, but they are laying the groundwork so that maybe in a couple months, maybe in a couple years, they're starting to eye it as far as corporate documents and their entire structure goes, but not necessarily go out and issue a token. Can you talk a little bit more about that?
Yeah, it comes down to what an STO fundamentally is, and one day we'll get to a point where we're doing STO with like native on-chain assets, and that's going to be super exciting. But for now, almost all STOs, even if they're real estate STOs, are pretty much just equity being tokenized. And equity being tokenized in a Delaware company, which most US companies are, is just moving the equity and putting it on a blockchain instead of on an electronic ledger. And so when you do that, there is no reason that you need to actually do that at launch. You don't need a token at launch. All you need to do is actually issue the equity, and in 2 years, if you have documents that are properly drafted, then you can go ahead and tokenize it. So you're going to have language in there that's going to allow you to redeem stock, for example, in certain situations where you have a token holder that is on the OFAC sanction list and you can't actually distribute dividends to him or have him hold your stock. So maybe you're actually going to redeem that stock for nothing. Or you're going to go ahead and say our stock ledger can live on a distributed ledger platform following the language from the Delaware Corporation Law. Things of that nature, you build it all into the corporate documents so that when costs go down by 50% or 80% or 90% in 2 years, we simply say, okay, now we're going to go to that issuance platform who's going to charge us a lot more before. Now we're going to actually tokenize our stock. Now we've got 10 exchanges to trade it on, and we're going to go trade it at that time.
I was like finishing Marc's sentences in my head there because it's funny, when you were asking that question, I was thinking to myself, what is an STO? What is a security token offering? And I think that a lot of people right now look at it as, all right, I take an asset and I tokenize it and I sell the tokens. And I think that that process is completely backwards. And frankly, this might not make me super popular, but I think that this is actually significantly slowing down the adoption of security tokens. Because creating the token is not the most important part of the process. The most important part of the process is getting the deal funded. You need to find a lawyer who knows what he's doing, who can put it into your docs that you can tokenize. And then you go out to all of your traditional investors and you say, I have a great deal for you, come invest in it. And the tokens are completely irrelevant at that point, because right now, explaining to someone what a tokenized investment is just an educational hurdle, an additional educational hurdle that you have to get over when you're trying to sell your deal. So what we need right now are people who are willing to put that language into their documents, who are committed to the future potential of tokenizing an asset, but who don't tokenize it right off the bat. Go raise the money, Because if you are, before you've raised any money, and you're looking at, all right, I need to raise money now, and a tokenization platform says, okay, cool, I'll tokenize your fund, your asset, your whatever, and I'm going to charge you $5,000, $10,000, whatever dollars a month, and take a percentage of your raise, and then we'll go raise money. That's pretty tough, because at that point, you have $0. But if you go raise all of your money, and you have $5 million in the bank, well, now those fees don't really look that tough anymore. And you don't need to tokenize first in order to raise the money. You should be raising the money first, and then tokenize.
You know what we should start saying? We should start saying, we're going to go sell the deals, and we're going to let Security Token Academy do the education. And then in 2 years, when everyone's educated, then we'll give them tokens.
100%.
Well, then the education part is the crazy thing. Like, you're absolutely right. Most of us, or a lot of us, came from the crowdfunding space, which is why we know way too much more than we ever want to know about the specific regulations around security tokens, right? Like, none of us, well, not none of us, but a lot of us are forgetting the lessons we learned in crowdfunding, which is just slapping crowdfunding on a deal is not going to make an investor want it.
Yeah.
It actually, if anything, can confuse them,
100%.
can signal that this company couldn't raise money any other way, so they're trying this newfangled thing. And what you either need to, tokens need to be an integral part of your company or reason why you're doing it, or it should make the product better maybe in the long term, but you don't have to lead with it. If you're leading with it, then you're probably not the greatest deal, because the deal, like the company or the piece of real estate or whatever it is that you are tokenizing, should be what you lead with. If you don't have a good deal, who's going to invest in it, regardless of if there's tokens?
So I do want to, tackle this point about how do we get these deals funded, right? And fundamentally, it's a two-sided equation. One, you need something that is just a really good deal to begin with without tokens, and two, you need buy-side demand, right? And so how do we get those two pieces of the equation? Do we absolutely need the institutions? Can we do it without them? What's going to bring us to that tipping point?
So right now, everybody's trying to create a primary issuance market, right? They're tokenizing first, and then they're going out and saying, buy my tokens, as the primary first investors. And you have this whole educational hurdle. And you cannot tell any of them that there's any liquidity in the secondary markets, because the secondary markets don't really exist. And so what needs to happen is you need issuers to have a deal, fund the deal, and then 12 months from now, 24 months from now, tokenize the deal and allow their LPs to put those tokens on the secondary market and create a liquid secondary market in that way, not a desperate primary market where they're like, please, dear God, fund my deal, I need the money. It's just an investor who says, hey, I have tokens, let's test this out. I'll go see if I can sell them. I'll go see if I can buy them. Create an organic secondary market. And if there's an organic secondary market, then that naturally breeds a primary market. Because then you can go out to people and say, hey, these are blockchain-based tokens, and look, there's a secondary market where you can get liquidity on them, and it already exists.
Well, there's actually, I've watched all his videos on Security Token Academy. A good friend of Security Token Academies is a good friend of mine, David Wield, the former vice chairman of NASDAQ. And he talks about a lot on stage and on some of these videos that the bond market, what they realized in certain bonds is that bonds that take their distributions and their interest and they calculate it monthly instead of quarterly, they trade at a premium.
Yeah.
I don't remember what the premium was, a few percent, but it's significant,
Yeah.
right? So if you take the technology and the potential of the blockchain and being able to calculate things like interest, give distributions, and actually share, especially in real estate, what you're an expert in. Imagine if people that owned real estate could get dividends daily or weekly or monthly versus quarterly or annually. That would probably make them trade at a premium, and then you'd be using this space and using it for actual good and making the product better, instead of confusing people the other way around.
The other
One guy gets it.
The other interesting part is what are the securities that we should be selling? Because one thing that kind of the crypto world, or just maybe it's just blockchain in general, has brought about is kind of new creativity in the way that we're structuring deals. My view is especially when it comes to early to mid-stage companies, investors are used to receiving stock, probably preferred stock. Give them what they're used to, especially in these early stages. what a lot of people are coming up with is really interesting things like, hey, let's do a profit share or revenue share, or on the real estate side, let's have 2 tokens and let's kind of split up the kind of waterfall in a different way than we have historically. That is all stuff that I'm personally super passionate about, and I'm really excited to see it happen, but we're not ready for that yet. Right now, let's give investors what they're used to seeing.
Well, you're excited about it because Henry told us about it on the phone and explained every intimate detail. If everyone had a Henry to call, we'd all be stoked.
But I want to ask you this: like, is all these new financial instruments and new distribution structures? Is that going to be too confusing for investors? Because they're literally going to have to sit there, go through the paperwork and say, okay, so this is how this one works versus, okay, this is the standard, distribution structure for a commercial real estate deal in the US.
Well, I think there's things that, there's a certain level at which it's going to get too complicated. I mean, there's some things that people want to do that are super complicated. But if you tell an investor, I'm just going to give you a percentage of revenue, that's pretty simple. Actually, that's much simpler than anything you really see today. There's a lot of reasons why that wouldn't be interesting. There's a lot of reasons why if you told me I just want a revenue share, that's nice and simple. I'd say, hey, are you going to give me a liquidation preference as well? Because if you go sell the company and I give you $10 million for this right to tomorrow's revenue, it doesn't really help me. So naturally, the instrument might not be as simple as just a revenue share. But the point is you can get something different than people are offering today. Yeah. Or on the debt side, as an example, provide more distributions more quicker than you do usually. You can even do interesting things like on the debt side. If you've got a debt instrument that is now tokenized, you're going to pay distributions, for example, in a stable coin. Well, right now you wait X period of time and then you get paid that distribution. You really don't actually know if they have the capital to pay you. Well, what about the days where the documents are basically going to say, oh, and by the way, every day you're going to set aside a certain amount of stable coins in this wallet address that we can look at any point in time to know that you're continually capitalizing it so that we know when you're ever going to get behind on payments. And then that's going to get paid out every 3 months, for example. So there's really cool things like that I think we can do that will actually be more transparent and more useful based on the type of security that you're selling.
Very interesting. I do want to quickly touch on, the technical infrastructure and the state of what that is today. Custodians, there aren't a lot of qualified custodians in the space, but there are some, right? And I know that, the exchanges and the issuance protocols are just getting to that point where they're solving a lot of the major issues. What do you think is the future of security tokens? Are these going to be self-custodial, or are we going to be using custodians? Aside from the fact that it's pretty much written into the regulations that we need custodians. But what is the future of all of this?
Well, I'll start by just saying like the basics of what it is now, because you guys will probably have a lot to say the technical details of custodians versus holding it yourself and whatever that even means in security tokens versus what we're used to in crypto. Right now, a security token, the way it really is it's these tokens that are pointing at a traditional piece of paper, exactly what you guys are saying. Because there's not almost anything going on in that token other than saying there's a memorandum that's hopefully on the website, so it's transparent in some way, at this company that we're pointing at, right? Like you look at Blockchain Capital, you look at Spice VC, right? These are tokens that say you have one share in that piece of paper. That's the same piece of paper you would be offline if you're just a normal fund. So if you think about it that way, there's not much going on yet on the innovation side in security tokens other than the fact that it's on a token and that token means something on that piece of paper. But the future, I think, will be where a lot of the regulations and a lot of the implementation of what's going on when it comes to distributing the things that you're talking about will actually happen in the token. And they'll know, for example, if Henry is sitting in another country and what his status is, if he's allowed to even invest or buy this token. Right now, it's still up to the service providers to figure that out. It's still up to, Open Finance to basically verify that these two people can trade this token and deal with it. But
so are you talking about building that into the protocol layer itself?
I think that's the future of it. I think that a lot of what's going on, and I'm a bit biased because of Onera, but because I think that's what we want to build, and I can explain why. But for example, Amy from Spice VC, he's sort of lately been famous for trolling this one company. I won't name the company, but he created tokens for the Brooklyn Bridge and then posted online, who wants to buy the Brooklyn Bridge from me? It's crazy because they say they're a compliant security token platform, but how do you even know that the piece of paper they're pointing at is legitimate or not? Right? Like if blockchain capital, I don't think they are this way, wanted to be. And I know we're totally sidetracking a bit.
I was like, custodians.
It's sidetracker on sidetracker crime here. But if blockchain capital wanted to be fraudulent or do something that was not above board, I don't even know if it would be illegal. But if they change their memorandum, just like VCs sometimes do, they can send a letter to their LPs and make some changes and do some things in certain situations. But if they wanted to do that, there's nothing that changes on the token side. So if you're a token holder and you aren't paying attention, you wouldn't know that the memorandum was changed on the website. I don't even know if every single one of the security tokens even publicly shares their memorandums.
So tie this back to custodians.
But let's go back to shareholders today.
Yeah.
It's the exact same thing. So dealing with early stage companies all the time who don't tell me half of what they do and then come to me and said, we just did this.
So that's insanity that needs to be fixed with the blockchain and the transparency.
That's insanity that needs to be fixed with humans. That's like a much bigger issue. But I mean, it's just something that exists anyway. And I don't think tokens or not, I think that's an issue. I mean, on the custodian point,
yes.
I think I'm kind of split on this. So first of all, we had big progress today. So Prime Trust saying we're not going to charge fees, anyway on
we have Prime Trust here
of digital assets. That's huge because you don't actually pay those fees with traditional securities. So why were we paying them with digital assets? Right. So that's big news.
And it signifies that they're recognizing that the risk of these assets is not significantly greater than traditional assets. There's no more risk in a digital security token than there is.
That's true. So what happens? So I want to know.
To clarify, I do believe that what they're doing custody for free is actual crypto, not necessarily security tokens. Yes? Yes.
Correct.
Okay.
Okay, well that's interesting.
Well,
but that's just a step in the next direction. That's just a step.
You better not charge
Yes, it's way more risky to do that than security tokens.
That's true, because that's the thing is I want to know from people, technically, like, can somebody steal a security token if I have to do KYC, if there is actual proof on the ledger that I'm the one that owns the security token? If you steal it out of my wallet, it's not the same as a Bitcoin address sending it to another Bitcoin address to another Bitcoin address that's anonymous.
There's no stealing security tokens.
It's the ledger that conveys value, not the security token itself.
The ledger conveys ownership. Yeah.
Yes.
I mean, I guess if that was able to be hacked, then you could steal it. You have to go base layer hack to do something.
Yeah, arguably, but the question comes down to actually, do you need custodians in the context of security tokens at all? I mean, do you really need them? And right now, I think we need them. The law requires you to have them. The question is, in 2 years, well, that's not fair. 5 years, when the SEC looks at this and goes, I actually really believe in security tokens, the way they're being managed, all of the infrastructure behind security tokens. We actually trust that works now. Okay, so now that we trust that works, the question is, if somebody loses their tokens and they can just get it back, if that will actually happen, i.e. an investment company registered under the 40 Act that needs to have a qualified custodian, loses somebody's security, if they can just get it back, do we really need to have a custodian holding that security or not?
That is a fascinating question.
Hopefully.
All right. Well, thank you so much to our panelists. They will be here hanging around for a little bit.